Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Kish Bancorp, Inc. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Kish Bancorp, Inc., please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome William Hayes, Chairman and CEO, Greg Hayes, President and COO, and Mark Severkel, Executive Vice President and CFO of Kish Bancorp, Inc., which trades on the OTCQX Best Market under the symbol KISB. Welcome, William, Greg, and Mark.
Thank you, Matt, and welcome everyone on behalf of Greg and Mark and all my colleagues at Kish. It's a pleasure to chat with you this morning and talk about Kish Bancorp. Let's go right to the presentation if we can. Of course, there is a standard disclosure, but I want to start with just a word about who we are at Kish. We talk about performance with clear purpose. We have a very rigorous commitment to exceptional financial performance built upon a clear mission and a clear purpose. Want to just touch on those. Our objective is to achieve sustainability through an unwavering focus on the client, and that is built upon a strong core philosophy that we believe we can make lives better. And that is a well-accepted focus across the organization. A quick snapshot of Kish. We are a diversified company. We'll talk about our business units momentarily, but we are built around a core banking engine located in central Pennsylvania, the home of Penn State University, also Juniata College. We're about $1.3 billion in assets, and as you can see there, we're the leading community bank in the marketplace, but with significant growth opportunities, not only in Center County, but as we enter Blair County, open up Juniata County, we have strong growth opportunities there, and in northeastern Ohio, where we have a loan production office that's very active. Our hallmark is quality, and as I said, we're about $1.3 billion in assets, a little over $1 billion in loans and deposits. I want to point out our stockholders' equity of $72 million. That is net of AOCI, $88 million if that's added back in, but not a material number for us. A market capitalization of $84 million and just shy of 15% return on average equity. We are entrepreneurial, and entrepreneurial with a clear focus on serving the client, but also in driving non-interest sources of revenue. While our fee and non-interest income number is just under 24%, our goal is to be closer to 30%. Problem has been the bank has been growing quite quickly, so this number, while it's up double-digit percentage-wise, it is just keeping abreast. Banking is at our core, as I said. We have a full-service retail banking platform, and our mortgage banking unit is very robust. Last year, obviously, we had a significant slowdown there, but our other units were more than capable of picking up the slack. Wealth management, we have registered investment advisors, financial planners. We also have a fiduciary and trust and estate management division, long-term long-term care and life insurance. Big part of that, just under $500 million in assets under management. First bank in Pennsylvania to acquire a property and casualty insurance agency. We recently completed an additional acquisition in that line, and it contributes just over 25 cents earnings per share, the same for wealth management. Benefits consulting is focused on serving our business customers. It is an employee healthcare and benefits consulting practice. Travel, not a material part of our bottom line, but it is an important service to our higher net worth clients. We talk about where we rank consistently among community banks nationally. We have, in 14 of the last 15 years, ranked in the top 200 community banks by American Banker magazine, based upon our 3-year average trailing return on shareholders' equity, and that's for banks of under $2 billion. Our executive leadership team is got both breadth and depth. I've been doing this job for 40 years. Greg's been with the bank for 17 years, not only driving day-to-day operations, but our technology innovation and our digital transformation. Bob McMinn, our general counsel, has also been with us almost 20 years. Mark Severkel, not a community bank CFO, comes from larger institutions and brought with him a level of sophistication that's been very valuable to us. Rick Sarford, over 35 years in lending and credit. And as you'll see, our credit culture is very, very pristine. Organizational development's a high priority for us. Suzanne White drives those initiatives for us. Other members of the executive leadership team are here. You can review these. But as I say, good breadth and good depth. We're going to talk about business strategy for a moment. And for that, I will turn to Greg Hayes, our president.
Thank you, Bill. As we look at our strategic focus going forward, founded as an organization focused on our customers at the core of what we do, and as we grow significantly, we allocate our strategic resources very carefully. We know that customer experience is at the heart of what we do and what differentiates us, and our strategic focus hones in on that and builds upon that foundation that we've established through a focus on building the best team in community banking so that we can passionately deliver legendary service. It also is focused significantly around growing the customer base, and I'll elaborate some more on this one, but we're working to enable personalized human interactions through great technology to elevate the client experience. Obviously, growth is a critical part of our long-term sustainability and our capacity to attract and reward capital. So we are focused on expanding markets, clients, and the utilization of services to achieve that profitable growth and ensure our long-term sustainability. As quality has always been a hallmark of our organization, our strategic focus around quality is to achieve greater organizational excellence across every process so that we can build a more effective team. And then finally, as a community organization, our alignment with the community continues to be a high priority as we will focus on promoting the engagement of our team in our communities to elevate economic well-being. So allow me to elaborate on our growth and our customer focus as we go forward here. Our current campaign and human-enabled digital experience focus comes through our Your Kish, Your Way promise. This is a promise to our clients that digital tools and technology will never replace the human relationship. It will only enhance them. And so while our clients span from the Amish customers to Penn State students, whether it's a fully digital relationship or more traditional in person, our customers can find that we are here for them with those experiences. And communicating through our Your Kish, Your Way advertising campaign, you can see more about that on our website at mykish.com. But this is the heart of our growth focus that is relationship centric. We know as a community bank, the relationships we deliver continue to differentiate our services over our competitors. And as technology disintermediates that we're using technology to elevate the relationships, not create a barrier or an obstacle to our customers' access to our staff. Finally, relative to growth, this is another significant opportunity for us and a significant element of our growth strategy. You see that we are growing into the Blair County to open a branch in the summer of 2023 in the Altoona market. That is a significant market at $3.5 billion in deposits. The Juniata location is a location that we have opened our first location. It's a micro branch, and we're looking to open our first full service branch in the coming years. And so as we expand and grow into new markets, these are opportunities for us to continue to bring that customer-centric focus to broader set of markets. Additionally, we've done that through our Ohio loan production office and our team of lenders in Ohio who bring the Kish level of expertise across a broader capacity and the needs of those clients in the greater Ohio markets, including Columbus, Cleveland, in even markets outside of Ohio, in Michigan, and in the South, including Florida and South Carolina. We expand to provide these services to those customers who find value in what Kish brings and in our expertise in commercial real estate lending. So these are all opportunities for us, and we focus on our growth strategy going forward. Bill?
Okay, thanks, Craig. Now let's get to the meat of the presentation, which is about financial performance for investors, shareholders. Take a look at some graphs here, and you can see that as we have invested in the infrastructure, we've been able to grow not only in mid double-digit ranges, but accelerating rates of growth, both for total assets, deposits, and loans. And those being able to grow them in tandem has been so instrumental in supporting our financial performance. Next slide. Taking a look at our deposit mix, we have a diversified deposit base. It has been relatively unconcentrated in terms of large depositors, brokered CDs, that sort of thing. The growth in the last few years has been around core deposits coming out of PPP. We picked up a number of relationships, and that continues to grow and expand the diversification of our deposit base. Loan mix, also well diversified. We have a non-farm, non-residential portfolio that, as Greg said, is diverse geographically, but primarily focused on income-producing multifamily units, not comprised of medical office buildings or retail office or sales space. So a good diversified loan portfolio that's also been growing at about 15% for the last few years. Quality, we talk about quality being our hallmark, and you can see that for 4 years, quality has simply been at the very highest levels, not only for loan delinquencies, but also for net charge-offs being at near zero or below. As we talk about performance for net income, you can look at the year-over-year increases. That is the gold bar or the gold line. The blue bars recognize the significant acceleration in the last 5 years for net income, more than doubling from $6 million to 12.8. Net interest income is clearly the most significant driver there, as is a relatively stable net interest margin, so that growth in loans and deposits in that double-digit range have been translating into not only higher net interest income, but higher net income as well. Going hand in hand with that, we see non-interest income also reaching in excess of $12 million in 2022. We strive to remain diversified. Wealth management, I think, as I alluded to, was up by 23% last year. Kish insurance, recurring revenue up by over 6%. There we've been digesting the acquisition of a new agency. Kish Travel, kind of picking itself up off the floor following COVID. Kish Benefits Consulting, also a growing part of our business menu. Mortgage banking continued its strong presence, even though we dropped off from the extraordinary years of 21 and 20, but we are still running well ahead of 2019 and continuing to expand our market share for residential mortgage lending. Bank service fees up over 18% in 2022. As I indicated previously, the expansion in the number of clients the bank serves is really driving check card revenue, other sources of bank service fees that grow by client relationship. What that produces for shareholders is consistently strong return on shareholders' equity. You can see the gold line, our peer group, that's through September 30th, but for the peers, but also elevated by some of the AOCI numbers that we were seeing towards the end of 2022. Price to tangible book reflects the opportunity that we think exists well behind peer group averages as a percentage of book value. And also supported by the strong organic revenue growth that we just referred to. And I want to make the point about our scalable infrastructure. We are reaping the benefits of an investment in infrastructure in terms of our core. We moved to a new core that does not penalize us for growth and has enabled us to translate new customer relationships into higher income. So double-digit growth in earnings per share, over 30%, return on shareholders' equity approaching 15%, are two powerful metrics that help to drive future value as well. Net income of just under $13 million in 2022, as I said, up over 30%, and more than doubled from 2018. Earnings per share, $4.90. That compares to $2.35 5 years ago. And if we apply standard multiples to that $4.90 per share, we start to understand what the value opportunity is in Kish Bancorp. Market valuation, I have already talked about. A consistent dividend expansion, however, in 7 of the last years, for the last 7 years, we have had annual increases in dividend, 9 out of the last 10. Share prices at the end of the year was $32, and that gives us that attractive PE of under 7. Going forward, leadership execution. We expected to sustain the rate of progress and growth that we've been achieving consistently over the last 5 years. We are focused on being data-driven, and our balance sheet structure has permitted us to be relatively nimble in responding to changing rates and certainly changing market conditions. We have been very active in the use of interest rate swaps and derivatives to give flexibility to our balance sheet management, but also to our credit pricing. And we have very sophisticated profitability management tools in place. So why invest in Kish Bancorp? I won't read all of these, but I will go along the highlights here. This earnings trajectory that is clearly evident is one that we foresee being sustained. Our leading market share position as a community bank in our region and our ability to tap new markets is a demonstrated capability that we believe is very positive. We are clearly differentiated when we talk about being client-focused, community-focused, people-focused company. That is our culture, and we're recognized for it in the marketplace. So as we talk about our focus on the future, we're talking about technology and innovation, as Greg referred to previously, but we also intend to continue to ensure that what we call the twin rails, which is traditional banking going hand in hand with transformational digital banking being an important part of the equation going forward. So that completes our presentation, but we are welcoming any questions that you may have. And
I think I'll start with the first question here about mortgage, asking, will mortgage be profitable in 2023? I want to note that while 2020 and 2021 were significant years of growth with the refinance boom and the decline in mortgage rates, what we're seeing in 2022 and 2023 is levels that were similar to 2019. In fact, slightly ahead of 2019. And so we do see mortgage being successful as we go forward because of the strong brand that we've built, especially in 2020 and 2021. We've created a capacity for us to continue to serve those clients. Additionally, I would say that we have reallocated resources. We've transitioned team members to other roles and other positions to make sure that the appropriate resources are being applied to the level of volume that we're seeing in mortgage lending. So we've got a bunch of other questions relative to the current market conditions that are happening and what we're seeing with deposits. Do you want to address some of those?
Yes, our deposit shifts as far as colleges and universities has been non-existent. So over the last few weeks with the disruptions that we're all very aware of, that has not been an issue for us. We are paying close attention to some of our larger deposit relationships, but to this point, have seen only minor movement.
So the question, percentage of our uninsured deposits and recent deposit outflows, low level of deposit outflows, percentage of uninsured deposits as of our year-end call report was
slightly over 20%. That's fairly close to the average for community banks generally. And again, we've certainly had a call or two about where Kish stands, whether or not there's any disruption in our deposit base. But as I said earlier, the diversification of our deposits is a significant plus for us. And
I think that dovetails to the next question. Considering the recent events, how does the bank balance the opportunity of specialization against the risk of too much concentration on the balance sheet that might be relative to our lending activity and our loan and deposit mix? Can you speak to that?
Yeah, I think our diversification speaks for itself. Not only do we lend across the 5-county market of central Pennsylvania in reflection of the makeup of the market, so both retail and business lending across the spectrum is an important part of what we do. But to the extent that there is concentration in commercial real estate, I think I've spoken to the fact that there is diversification there as well, and that lending tends to be almost entirely focused on multifamily income producing properties, which are performing very well in strong markets.
Talking about our balance sheet management, the question is, do you outsource investment management or perform that internally?
We do we do that internally. I have a previous experience with much larger banks. And one note I think it's important to note is the flexibility in our balance sheet through the use of derivatives and through our back-to-back swap program and our balance sheet swaps. We were very flexible, changing our position almost just with a phone call. And very few community banks have that flexibility.
Or that level of sophistication. That's a good point. Another question here about our appetite for M&A to augment growth, or whether we would consider a sale.
Our focus is on sustainability and generating the financial results and performance that justifies that long-term focus that we take to planning, that we take to strategic development. Nevertheless, as an acquirer, we have proven to be fairly adept, primarily at acquiring non-bank businesses. Not that we would be entirely unopposed to bank acquisitions, but quite frankly, we take our culture very seriously. It is something that we protect and cultivate, and for that reason, M&A is not high on our list for expansion.
And just one final clarification on the last question, and I think you touched on it with your first response about large deposit outflows that we haven't really seen a lot. There was a specific question about whether or not we have university deposits, and you referenced that we don't have any with Penn State, but we do have some small college relationships that do carry significant deposits with us and have not expressed any concerns with our current situation. So that addresses all of the questions in our submit a question box. We're at 7 minutes, so I think we're at time. Appreciate everyone's time today, the opportunity to get to present to you and show you Kish's strength as we go forward. Any final comments, Bill?
Well, we welcome any questions, follow-up questions that you may have. If anyone would like to schedule an opportunity to chat with us, we would welcome that as well. We appreciate your time, appreciate your interest, and look forward to hearing more from you.
Thank you.
Thanks very much.